So let's maybe close out with this one, guys. The mortgage demand. So mortgage demand from homebuyers continues to recover even with higher interest rates. And this is more opinion. And this is, again, the forecast part of me, which is like, I think people are just like, well, whatever, it is what it is. And whatever I got to do to get in, I'm going to do. If we got to get an extra job, if I got to get roommates, I got to qualify with other people with me, buy with my friends, people are just figuring out ways to do it because they're like, you know what, hands up in the air. Well, whatever. It doesn't look the way it did for my parents. I'm not waiting no more. I'm going ahead.
Yeah, I think it's time to understand what the market is doing. Play within the realm of what the market is giving you right now. You can't go off and make your own play right now. Look for crazy price reductions, because if that's you, this is definitely not the market for you to buy. Right now, it's for people that need to buy, that need to step up in bases, that need to downsize, need to pay off debt. It's all transactional purchases that is happening yourself. So I think that having that information, you can't get too lucky with. You can't get too comfortable with trying to wait and seeing that prices are going to come down. But one thing that I do see is that you can't look at buying a house right now like you're day trading or like you're swing trading. You can't time the market perfectly, get in and get out. It's kind of a long-term play. So make sure that you know that going in, because these next 3-4 years are going to be very scrutinized depending on what decision you make today.
Damn. Yep. Brian, I think they listened to you. I think this article was made because of you. You've been telling buyers, prepare. And that's really what we're seeing right here.
I'm running out of ways to say it.
But it's so true, right? Like, just prepare. And I think that's what's happening with a lot of people is let me just follow Brian's instructions. Let me give all my paperwork. It's not as difficult as people may seem to get fully approved and understand what your current options will be. And if there's certain things we have to work on, if one thing you always say is that we'll create an action plan for you, whether it's going to be repairing your credit, whether it's going to be having to increase your income, or just maybe that's not going to be the purchase price where you're going to be at. These things, this full transparency that you provide, is just something that people should take advantage of. And now we're going back to an article that pretty much states that, like, here, prepare for yourself. There's nothing wrong with that. And we're starting to see more people going into the trenches and just getting approved.
And there's still options for you. It doesn't hurt. It doesn't hurt. And there's still options for you. The very top of the show, we were talking about people with student loans buying houses. Okay, so last year, 32% of the people who bought homes had student loans. Yeah. So if you have a student loan, and then this article is referencing that our government loans have had a sharp increase of number of applications. So, okay, that's FHA, that's VA, that's USDA. They either have no or low down payment choices. So that typically goes hand in hand with first-time home buyers who have student loans and are still qualifying. Like, this is the play. This is the move. Yeah. If we're not seeing that there's going to be a toppling of prices on the market, then at some point you have to be honest with yourself and look in the mirror and go, when am I going to do this, or am I just not going to do it at all?
Yeah, no, it's wonderful. As a matter of fact, we just got a client approved, and she called me. We approved her back in 2021, didn't pull the trigger and everything. So she just, hey, I already have a home, so I'm not ready. Sends me a text, we're ready. And I'm like, I go in there and you already live in a great area. I live in Bonita. It's a great area. It's a great house. But I feel like, we want to push for something bigger. And I'm like, okay, so what are your plans? Are you going to, sell that property and, and get your VA back? She's like, no, we both have VAs. So I'm like, okay, great. Well, what's your balance on that? Oh, it's like $500,000. What are the rents? I looked at the payment. The payment's like 28 and change because they got a 2.25%, easily rental for $5,500. And I go, why you guys want to just keep that? And they're like, well, yeah, we're thinking to either keep that or you want to take advantage of sell it for $500,000, no capital gains, right? Because she's a married couple, so they can go ahead and have $500,000, no capital gains. She's like, I never knew that.
Oh, geez, what?
And I said, so that's you can go ahead and buy other property, still go at 100% financing, because they tell me, yeah, we retired. We both receive VA disability compensation.
Oh, my gosh,
So
dude.
we can use one. So now we're putting the whole story together. Long story short, I got them approved for $1.4.5 million, debt to income, 36 over 41.
What?
Which is still low.
That's super low.
Keeping the property, not having to sell it.
That's a dangerous. That's crazy. That's a dangerous buyer's combo right there. Just having that financial profile right there is just
crazy.
I'd be so grateful.
And she was so like, whoa, I didn't even think.
Dang.
But here's the sacrifice, right? They've been working hard. They retired from the military after 20 plus years. They got disability. Now they have great jobs, great retirement, disability. So they're now relying on 3 incomes.
Yeah.
Their son's also in the military, PCS to San Diego. So they're thinking, hey, maybe we'll have my son live in this property and we'll just rent it for what that is.
He's going to get BAH. Him and whoever else going to live there can contribute to the payment. That's crazy.
But that's we also put ourselves in a position where, do you keep that or do you sell and take advantage of that 500,000 capital gains,
right.
tax-free capital gains, invested in different investment vehicles where it can give you a greater rate of return instead of that 4% or 1.1% like they said earlier. Who knows?
That's amazing.
What do you do, right? But they're in a good position.
That's a great story, man.
Thank you for sharing that. That's freaking awesome. And I think that we share so many, tough, real stories. Like we're talking, it's hard to buy a house right now. Yeah, it's very expensive. But also in between what we talk about, we share those success stories. We share those strategies. We share that it can be done. We share that people are doing it. And I think that's what we need to focus on. There's so many reasons why you shouldn't do it, but then look at all the success stories of why people are doing it, why they are succeeding. And I think, stories like that are just a testament to why people can buy if they're willing to buy. And if you have the right team, the right information in front of you, then making those tough decisions isn't as hard.
Yeah, that's a great point.
Yeah, I think we're going to see more of this. I mean, just the rate of people that are on social space right now talking about how to use your VA benefit, specifically VA benefit, to your advantage as a buyer who's looking to also create a real estate portfolio of investment properties and how to do that by utilizing your VA. I see a lot more of that now than I did 3 years ago. Way more than 5 years ago, and even way more than that than 8 and 10 years ago. Like, no one was talking about that 10 years ago. I mean, unless you want to check my memory, but back in 2015, I didn't see a lot of dudes on social media talking about how to use your VA benefit to buy a second, third, fourth, or do what you just talked to these clients about. So it is happening a lot more. And people that are in the military that have done this are coming out and getting into lending. They're getting into real estate. They're getting into development. They're getting into investment. And they're leveraging their benefits, no matter what that benefit package looks like. They're leveraging it to do all these things I just mentioned.
Yeah, I mean,
and it's a big tide shift.
Yeah, and I know we're focusing right now on VA, but FHA is the same scenario. FHA, we just closed on another deal, self-employed, and certain restrictions don't apply when it comes to FHA because it's a government loan, especially for investors, not investors. I apologize, self-employed people, right? So they have the tendency of just kind of, I don't want to say bending the guidelines, but they're a lot more lenient because it's got that backing from the government, whereas with conventional, they're just going to really stick with it, and that's what it is.
Yeah, it's a different marketplace.
Very
for sure.
different, but the whole goal with it is, hey, on the next tax returns, just claim more income so we can qualify for conventional, so when we need to refinance, we free out of that. That way we remove the PMI, that otherwise they stick with it for 30 years because they only went with 3.5% down.
Yeah.
Those are critical points. If you're self-employed, there's multiple ways to skin the cat.
Absolutely.
Just because you think that you can't get approved, that someone told you, I need 2 years tax returns, there's multiple ways. Sit down, have someone understand your financial profile more than anything, because chances are they didn't understand your financial profile when they went to approve you.
I honestly believe that inventory and market conditions are going to draw people in, and we're going to see more mortgage applications come through this spring and summer than maybe we even predicted. I just think that the environment is ripe for that. I think that's just what we're going to see. And it's not just me being optimistic over here in the corner. I see story and story again of people getting creative, people having tenacity, people going, you know what? No, I'm not going to be on the losing side of the coin flip and never be an owner. I'm going to be an owner somehow or another. And that discipline to ask a question, to get qualified, to go hunting, to be patient, to work out a concession deal with the seller, look, how many more times do we have to see that before we finally go, you know what? This has changed. Yeah. There's a whole new breed of buyer out there right now, and I think we're inviting more of them in, and I think we're going to see more of that, especially as inventory continues to rise.
The last weeks, we've just been seeing buyer applications increase. It's what it is. I mean, they're listening to Brian. I'm telling you, people are listening to Brian. They're finally saying, it's true. What Brian, the information that he's giving about preparing yourself and getting into the trenches is so true. It's not that complicated. Let's get this thing done. So good job. When you keep putting that
You said it earlier in a different way. You're saying people self-select out. It's like they're self-selecting like, oh, I'm gonna check myself out of the game. I'm gonna go sit on the bench. And the coach is like, no, get in there. You're we need you over there.
I'm the coach.
Over there, right? Yeah. So I think there's just some of that where people in your case studies is a good example of this, where it's like people don't think that there's a scenario like theirs that results in them getting keys and having their own house. But there is. And so as you keep seeing this happen, and you have scenarios, and then you have scenarios that people go, oh my gosh, that's my story, or that's similar enough where I have a chance, I have a fighting chance. Wow, I didn't know that. Okay, now I'm in.
Yeah. I'm lucky that you brought in I'm the coach, because right now, kids, you're seeing them grow up. Like when I was raising my older kids, now they're 32, 30, 31. Back in that day, personal coaching just started for kids. And if you weren't choosing to personally coach your kids, like get a personal trainer for them, like these kids are going to be left behind. Yeah. So you got to get the proper guidance. You got to get the proper techniques. You go out there and hopefully you get into that sport that you're getting and you'll understand it and you'll just be a better baller.
Yeah.
And so that's what I feel like you mentioning that. If you don't get the proper coaching or the proper surrounding, you're going to get left out.
Yeah.
And those are just going to be facts. How many people right now wish they had the proper guidance, proper information that they would have probably bought before? Or they would have said, I don't want to buy a condo. I should buy a single family residence because I could afford it, but I thought the payment was going to be lower and da-da-da. So fast forward, it's like, why didn't I do that?
Mm-hmm.
And I think, Brian, with all this information that you're giving, I'm glad that you keep putting it out there, because I think it's, getting the people attracted to that. Get a freaking approved. It doesn't cost you anything.
I'm very hopeful that it's growing like a bamboo. It's entrenching itself down in the roots so that it could sprout up. And that's what I'm hoping that spring and summer is looking like. Like everybody's just like, waiting for the right time, but at the same time, listening, applying the stuff that they've been waiting and they're learning. And then summer comes around and you have everything that lined up. You have the job, you saved up money, your credit's good, you paid down some debt. Like, what excuse do you have now?
No, and you're absolutely right. So people are going to say, well, it's because you're in the mortgage industry. You need to be saying that. Yes. I'm telling you, because the majority
and it's happening.
Of people, Andy, out of the thousands of people that we've helped, you know how many people have come back and said, I shouldn't have bought?
Well, none.
No, I looked at you. I was like, "Wait,
what are you talking about?"
Are you ready for a real answer?
Trick question.
We
none?
do. So again, going back to Brian, keep telling people, like, I'm glad that you're saying it that way, because people should just, once you get approved, you make your own decision whether you want to do it or not. But at least now you have the numbers, you have the understanding what that payment looks like. We're giving you the calculators, and if you're not getting the calculators through the person that pre-approves you, please ask them.
And that's the other
way
thing.
You understand your scenarios.
That's a really important point, and this is where we gotta kind of put our foot down on some things. Is like, listen, other people might tell you don't do it. Other people might say you shouldn't, and then there's gonna be these guys who are gonna tell you like how you can and how you should, and then you're gonna end up getting the thing you really want. So again, I don't want to just say ignore the naysayers, but you're going to have to ignore some of the naysayers who think you shouldn't, or the timing's better than this. And they're going to have their reasons. They're going to have their explanations. And that's fine, but they're probably going to lack the 20 years of experience and the thousands of closings. Yeah. Like, just to be honest, and I don't mean to say that to be arrogant, but they're probably going to lack 20 years of experience and thousands of closings that are going to try to compete for your attention to make you make a decision that may not be in the benefit of the outcome you're looking for.
Andy, what's the current equity percentage that we have right now? Not percentage, but dollar amount that we have.
It's trillions of dollars. It's like $11 trillion of equity or something stupid like that.
I think it was higher than that, than way higher.
Fine, I'm being conservative. Great.
It was like 50 trillion or whatever.
It's a lot.
Like, there's a reason why we have that much in equity right now. There's a reason. And if you go back even 100 years back and you see what homes were purchased at that point in time in comparison to what you have now, it's longevity in there. So you're not going to go wrong as long as you could still continue to make your payment. Yeah. And if you lose your job and you can utilize the community, to come in and say, hey, I'm going to rent a room, or I'm going to divide a room and I can now do two. You have to make sacrifices. Yeah. In the long run, if you're able to sustain that property, your equity is going to increase because we already have the data. Yep. For over 100 years, we're already proven that fact.
And I'm going to go back to the coaching thing. Some of the best athletes on the entire planet, in the entire history of all sports, have had coaches that tell them the minute little nuanced things you need to change or adjust to take your game to the next level. And because you guys are in that kind of situation, you're not just cheerleaders like, yeah, good, you could do it. Like, no, you're actually showing people, hey, change this, modify that, make this tweak over here, and then it can result in that pathway towards success. I think that's a huge, huge advantage, number one. Number two, I'm going to also say that the number one predictor of generational wealth is home ownership or not. It's not stock holdings or not. It's not passing down wealth or not. It's home ownership or not. So when you look at the, I don't know, last 100, 200, 300 years, you look at generational wealth that does go from one generation to the next. The people who have the most compared to those who have the least or none at all is home ownership. Yeah. It is the number one predictor of there being the potential of generational wealth because of this equity thing that we're talking about right now. This it's like that crazy friend that shows up to your door with a brand new sports car. Yeah. Hey, get in, hold on. Yeah. Like that's the market right now. Get in and hold on.
And that's the thing, right, Brian? We mentioned earlier about the foreclosures. That's why we're not going to see as many because people have a lot of equity. Yeah. They still have the opportunity, like, hey, if I did lose my job, I can't make my payments, I can go through this and eat up some of my equity for a while longer. It's just you're giving yourself a better opportunity, a better chance of being able to recover.
Yep.
And those are the very important, options to have.
Yeah.
When you rent, what options do you have? You can't make your payment, you're out. 30-day eviction.
You got to find another place to live.
You're gone within 30 days. California, unfortunately, hey, you file for bankruptcy, it could go for a couple of years, whatever. But still, that's your only option. There's nothing there that you gained.
Yeah. Homeownership for the win, guys.
Absolutely. So there you go, man.